All right. Good evening, Gadfly subscribers, and we're also going to make this a free content distribution as well, just due to the urgency of it. This is emergency urgent Gadfly broadcast. I got Ken Shortgun Jr. of ShotgunEconomics.com joining. Ken, brilliant minds think alike. We've both been kind of tracking the things that are occurring in the oil markets, and you happen to be putting out a great article. So I wanted to give you a platform to talk about exactly what is transpiring right now in the oil markets.
Yeah, absolutely. And it's too bad that right now in London, Paul's part of the world, he's still asleep. Their markets don't open till midnight our time. So he's probably about 3 in the morning, 4 in the morning or so, or maybe even less. But more importantly, the what took place. Now, I wrote an article earlier this morning compiling a number of different things that I read up on going back to last Thursday. In particular, okay, Russia a couple years ago consolidated with OPEC and created the sort of informal OPEC plus one. One of the reasons behind this is because China and Russia were dominating the commodities sphere or the energy sphere. So Saudi Arabia, Iraq and Syria were pretty much still occupied, so they weren't putting out as much production as they used to. Iran's under sanctions. Qatar, as we know, late last year decided to leave OPEC. So Russia was pretty much took over by fiat. So they were having their quarterly meeting in Vienna last week, and Saudi Arabia proposed and was signed by most of the rest of OPEC to go ahead and agree to a 1.5 million barrel per day cut as prices were starting to decline. Now, what we've seen is both with the coronavirus, the slowdown of the global economy, et cetera, oil demand has made the price go down from about $56 in February, middle of February, now down to 42 at the close on Friday. So Russia had to sign off on this decline in production. So they decided no. They came out and said no. And of course, it set off a chain of events. And so I want to read a little bit of why, and this comes from Tom Luongo at, Gold, Goats, and Guns. He said this in particular. OPEC needs this cut to remain relevant. The cartel is dying. It's been dying for years, kept on life support by Russia's willingness to trade favors to achieve other geostrategic goals. I've said before that OPEC production cuts are not bullish for oil, just like rate cuts are not inflationary during crisis periods. Finally, Russia said no, and they didn't equivocate. They told everyone they are prepared for lower oil prices. Now, Russia didn't do this just for the sake of wanting to see lower oil prices. Oil prices have already been declining. They've felt it a little bit in their pocketbooks. They knew that any type of decline in oil prices was going to affect their currency, but the ruble now floats. So it's not going to be as stringent. The other thing is Russia has been accumulating gold. They have more reserves than they do debt. They've got less than $490 billion in debt. They have the Nord Stream that's just about to be finalized. They have the southern route, the Turk Stream. And more importantly, the world is in chaos. Okay?
Absolutely.
The world is in chaos. Besides coronavirus, every single stock market across the world has been in absolute chaos. One day down 1,200, next day up 1,300, down 750, up 1,000, etc. That's not just United States equity markets. That's in Europe. That's in China. That's across the board. Supply chains have been cut off. Shipping of goods and exports has been cut off. Plus the bond market. All of a sudden in the United States, the U.S. Treasuries which are the safe havens, are being destroyed for yield. I mean, we talk about is the Fed going to do rate cuts? What's the point of doing rate cuts if the 10-year Treasury is moving towards zero anyway? That's what people, that's that was the primary rate for lending. But there's something else that's taken place. We know that in Syria, Turkey is trying to extend itself and create the new caliphate, and Erdogan has suffered some severe losses over the past couple weeks. And Russia is, for better lack terms, bitch slapping Erdogan into getting in line. Well, Erdogan decided that he was going to scream to NATO, NATO, help us, we're under attack. Well, no, their sovereign domain is not under attack. They're trying to attack Syria. So NATO said, well, no, we don't want to mess with Russia. Erdogan, you're an idiot and a buffoon. We're not going to do anything. They pretty much remain silent. So Erdogan threw a tantrum and decided to release a number of quote-unquote refugees that aren't really from Syria. They're from Afghanistan. They're from Africa. They're from everywhere in the Middle East and Northern Africa. And they have, for all intents and purposes, declared war on Greece. Well, if they suddenly declared war on Greece because now they're firing across the barrier into Greece while the refugees stand outside the fences and throwing rocks and all this stuff, NATO may have to get involved on the side of Greece against a NATO member, Turkey.
That's
so you have NATO fighting NATO.
Insane.
And so it was the perfect time when everything is at a perfect storm. Now, I'm not calling all these things black swans. The coronavirus was what one considered black swan, but everything else are white albatrosses with their wingspan just hovering like a Damocles sword over the global financial system. And so Russia has decided that they're going to go ahead and lower the oil prices because it's going to hurt Middle Eastern countries. It's going to hurt the United States and the shale, because shale has suddenly become the number one, U.S. has become the number one producer of oil, even surpassing Russia with their shale. It's unaffordable. And if we saw margin calls occur last week because of what happened in the equity markets, imagine what's going to happen to the derivative market when shale is now sitting at $20 a barrel. It's already down to 32.
Oh my.
But at $20 a barrel.
It's going to be a bloodbath.
Yeah, all these loans trying to come in. So Russia's playing its gambit. And do you remember how the Cold War ended? There were two things that bankrupted the former Soviet Union. One, there was the deception of Star Wars, coupled with the actual military buildup by Ronald Reagan. Secondly, there was in 1988 a push to lower oil prices, which, since Russia was primarily an exporter, that it was declining oil prices, which bankrupted their economy and ended the Soviet Union. Now it's the opposite. Our primary export in the world is shale oil. And if they force oil prices down, they're going to bankrupt our biggest industry. And what's that going to do for the United States financial system?
It'll be a Lehman-style type event that will occur due to that, Ken. There's no doubt about it.
Exactly. So let's take a quick look at when the markets open in Asia. And I mean, we're just starting in Asia. Okay.
Can you do a screen share, Ken? Can you do a screen share on your end?
Yeah, let me do a screen share.
Okay, let me stop mine. There you go. I'll let you take over it, and you can.
Let's see. Okay.
All right.
Okay. Let's see. Entire screen.
Yep.
Okay.
Okay, it's not coming up yet.
Let's see. Oh, there we go.
There it goes. Okay, I can bring it up now. Okay, go for it.
Okay, let's take a look at the first thing. First tab, Dow futures. Dow futures are down 988 already, and we are what 422. So we are about an hour and a half into the open. Let's see. Now, since I'm out in Pacific, yeah, we do have everything starting a little bit more. So we have Australia open. We have Japan going to open very soon if it hasn't. We have Korea opening. The big one's going to be next hour is India and then China. So within the next couple hours, we're going to see even more activity. But Dow futures at one point have been fluctuating. They've been down as much as 1,084 points in just last hour and a half since the markets reopened in Asia. Now it's down minus 995. That's really not going to change too much, and it's probably going to get worse.
Wow.
So think about that. We closed. It was fascinating because they decided in the last 52 minutes of Friday's market, they decided to shed about 600 points. It was down to 900, and then they went ahead and just buy everything. Part of it was nobody wanted to be short going into the weekend. They had no idea what was going on. So there was a lot of short covering. But needless to say, we were still down 500 on Friday. Now we're looking at another 900 to 1,000 points, if not worse, down at the open. People have been asking on CNBC, where's the circuit breakers? If you think about it, 1,000 points on a 25,000 point Dow is not even enough to scratch the surface of the circuit breakers yet. We need a 5,000 point day. That's going to do it. Okay, moving over to oil. Okay, we're up to 33. It's starting to climb a little bit back, but let me do a refresh here. Yeah, West Texas Intermediate was at, let me see if the one-day chart will come up. There we go. Was hovering just above 30. It's gained about $2.50 back. But we closed on Friday at 42. So we're down $9 now, and we were down $11 about an hour ago. Looking at gold. Gold had a nice little spike at the open. It's up $23 so far to $16.94. It's going to be pushing $1,700. And it did actually cross over 1,700 at the early spike. Silver didn't follow as much, though it is up a higher percentage. We might be able to see $18 silver tonight. So it'll be fascinating as we head into Europe, which would be about 11 p.m. Pacific time or midnight Pacific time. $1,700 gold, $18 silver, between $32 and $35 oil. That's going to be a nice little thing. Interesting enough, Bitcoin did not take well. You would assume it's going to be a safe haven asset. Nope. It dumped 8% today, between middle of yesterday and today, back to the lows for 2020. And the volume is a little bit above medium. Usually about $500 million worth of trading is an average day. Market cap on Thursday for the entire cryptocurrency industry was $162 billion. It's now down to $150 billion. So this is relative, but it's interesting that we're not seeing Bitcoin being utilized in any capacity as a safe haven asset. Finally, the last thing I want to take a look at, Goldman Sachs, once the markets were about to open, issued this report that oil should be in the 20s as a price war begins.
Whew. Ken, that's just devastating. That's just, wow. I want to go back to your article and ask a question real quick. I'll bring it up, but because I started tracking this early this morning, we discussed it last week on the Gadfly in regards to oil prices monitoring. But what about this move by MBS to go ahead and flood the market with additional oil after Russia backed out? Do you think that was staged as well or planned?
He's doing it because he's trying to create chaos. Right now, Saudi Arabia has massive budget concerns. Plus, they've been trying to sell Aramco shares. So you're going to drop the price, and you want people to buy into Aramco? Well, this is more of a geopolitical move on his part, because you have to take in consideration he arrested a number of royals again this weekend. With all the chaos that's going on in the world with coronavirus, etc., he took out the other two competitors for the kingdom, arrested them, and he's going after a lot of other ministers. So, what's the end all ploy behind this? Not sure, but Saudi Arabia cannot afford oil to be in the 30s or 20s for any extended period of time, because now it costs about $85 per barrel for them to go ahead and do it, even though they subsidize. They do have some oil wells that are cheap, that are down in the 20s, but overall, most of their oil production is quite high, and that's one of the reasons why they've lost so much money as well.
Yeah. Okay, cool. Well, and then also, how significant is it in regards to Lebanon defaulting on their debt for the first time amid this crisis? How many other countries are we going to start to see this happen, Ken?
We're going to see a massive amount, because the fact that the dollar was so strong. Let me go ahead and pull up the dollar chart here. We forgot to see. Let's see if it's updated. Yeah, look at that. We're in the 95 handle. Wait until this chart comes up. Let me change this to a 5-day.
There it goes.
Yeah, we've gone from in the 97s now with a spike down to 95.59. So for the longest period of time, most emerging markets, Lebanon's, the smaller ones, they had their debt denominated in dollars. Okay? Strong dollar means that it costs them more to pay back the debt, and they were starting to default. Now the global economy has come to a virtual screeching halt, so they're not getting any revenues to be able to pay for that, and so it's really going to kick off the defaults. We're going to see there's during the time of the Great Recession and early into 2011, 2012, 2013, Western banks, U.S. and European banks, were not investing in Western companies. They were loaning upwards of $16 trillion to emerging markets, because they thought that's where the growth and the yield was going to come from. Well, now that money has to be paid back with a very strong dollar, because back when they were lending it out, the dollar was between 72 and 80 on the dollar index. Those emerging markets currencies were a lot stronger. Now they've devalued to keep their exports up. Dollar is really strong, so they can't afford to service their debt. So Lebanon's default is going to be the beginning. We're going to see a lot more, especially if the entire global economy slows down to a screeching halt. And it's just going to couple on how long the coronavirus scare affects the global economy, as well as are we really going to see the curtain revealed now for how badly U.S. banks, the Fed, the ECB, European banks really are.
Right. So Ken, just to kind of recap this a little bit. So we are at the stage now, full out economic warfare taking place. How would you best describe the situation in what's transpiring right now?
Well, with the economic warfare, China is in no position to really do anything right now. Russia is in great position, and they waited the perfect time to do their response to all these sanctions. So with that being said, let's just say a dip a toe in the water for Russia, or is it the beginning of a clear delineation, because a lot of this too is in response to what the United States have been doing sanction-wise in trying to keep the Nord Stream from getting completed.
Right.
So they're saying, you want to stop us from getting Nord Stream completed? Well, guess what? We're going to redo alliances with Ukraine, which are going on right now, and we're going to destroy your shale. If we destroy your shale, we're going to destroy your pension funds that have so much money invested in shale. We're going to destroy your banks that have so much leverage invested in shale. And who knows what the derivatives are.
Yep. Yep. Any thoughts tomorrow? Obviously, as the markets open up, what if anything can the Fed do at this point, Ken, to try to counter this? Because we know it's going to be a Black Monday style event unfolding tomorrow here in the U.S. It's already happening overseas a little bit, but what are your thoughts? What will the Fed do tomorrow to try to fight this off? Will they any chance tomorrow that they would seriously consider closing the markets?
If they close the markets, it'll make it much, much worse, because the Fed and the financial system and even Donald Trump have been relying upon perception management. You close the markets, that perception, all those years and months of trying to keep a narrative and perception of how great the economy is going and how great the market's going and this and that are gone.
I'm just curious because we're seeing so many employers. I believe that Tim Cook just put out a message today stating that requesting that obviously the majority of Apple employees that can, probably administrative, things of that nature, to not report to work, going forward. So all this is being orchestrated. Obviously, it's right in front of us right now. What's transpiring, Ken, just unbelievable to be witnessing this.
Oh, absolutely. And, the thing about it is it goes back to that question. Is this truly a pandemic, or is this really something that is of dire importance when it comes to, disease, viruses, etc.? But the numbers aren't even close, not even close to what last year's regular flu season were. The interesting thing is, the vast majority of people who are dying are the ones who normally die at a certain percentage from the annual influenza. Those are over 60 years old, who have bad health, who were previously smokers. By the way, something else, in email, I think you may have seen between or something that was posted by Jim Willie earlier this morning or yesterday. There's a group that has done some real in-depth research into this, and they really believe that this is not a virus, but a bacteria. And it's a bacteria that doesn't have any cell walls, and so without the cell walls, it looks like a virus.
Yeah, I did see that. I haven't had a chance to go through it yet, but that's very interesting.
And if this is true, then as a bacteria, think of something like black mold, mold, that type of thing that can spread quickly. It's really hard to stop. But a bacteria, the reason that they think it's a bacteria is because antivirals are not working on those who have the coronavirus, but antibacterials are. So that's why they're thinking that. Well, where would that come from? Okay, they're not really messing with bacteria that much in a lab. Normally it would be genetic type viruses. But what happened in China all of last year? They had the swine flu, and they were killing hundreds of millions of pigs. Wuhan was a ground zero for a lot of this slaughter. Now, do you think they did it in a perfectly sterile fashion for all those animals? Probably not.
No, impossible with that many being killed.
And if you remember, the Spanish flu that came out of 1918 came from a farm that was slaughtering animals, and the virus came from the animals. It's quite possible that that a bacteria from the swine flu may have intermixed with something else, a corona type virus, and created this mutagen that really is more bacteria than virus. It acts like a virus, but it needs to be treated like bacteria. And if that's being said, then that we're not going to have a high mortality rate, but it's going to be like the influenza. Those who are susceptible to the normal flu are going to be hit hard, and they're going to be ones who really die. So that's what I'm asking: is the panic really necessary, or are they when you look at the raw numbers? I mean, think about it. We get a headline: 5th person in New York City out of 30 million gets the coronavirus.
Mm-hmm.
And you think it was the end of the world.
Right.
No, when they start saying the 950,000th person in New York City's got it, then I'm going to be worried.
Yeah, and I have firmly said all along that they were going to need something to blame on the downturn with the economy. The bankers, the government people, they're not going to want to take responsibility for the downturn in the economy. All the hopium that has been the last few years regarding the Dow and everything taking place, that's the last thing that they want. And I think also it has a lot to do with a lot of CEOs who are currently resigning as well. There's been an uptick in a lot of CEOs who are saying, you know what, I think it's a great time to get out and set sail.
Absolutely. And by the way, on an anecdotal thing, I pulled up the stock futures from CNBC. It's cnbc.com/pre-markets. They have the new futures open. It's minus 1,044. But if you take a look at it, it shows green and not red because their algorithm or their webpage is not set up to accept futures numbers over 1,000. So it shows up green instead and actually has plus minus 1,044.
Oh my gosh.
They're not ready for this. Nobody's ready for this.
Nobody's ready for it.
Yeah, no. Exactly. We're in uncharted territory.
We are. Ken, closing thoughts.
I just think it's going to be fascinating. We could see some serious intervention because this was not expected. But right now, the Fed proved when they did their half-point rate hike, didn't do anything. Mnuchin came in. It didn't stop the hemorrhaging. There's nothing the Fed can do. The bond markets are speaking. The bond markets are in control. Yields are at all-time historic lows. They've never been this low. We're going to 0% or negative, whether the Fed wants to or not. And Russia may just be using this as the perfect opportunity to put in the screws. And could we be seeing then a certain point when somebody comes up and says, hang on, let's have a reset?
Yep. Bingo. Gosh. The exciting times to be alive witnessing this, Ken, and thank you. I'm glad that you touched base with me and said, hey, let's do a stream over it. In fact, I got an alert just a minute ago that Gregory Mannarino did the same thing. He already did an earlier show, and now he did a special meltdown report that he just released a few minutes ago. But again, this has been a Gadfly Urgent broadcast, and we did make this a public broadcast. So if you're listening in on Facebook, YouTube, Periscope, Twitter, wherever you're tuning in, again, right now it's just very important, urgent to make sure that you're getting your news and your source of information from reputable sources, people who have been studying the markets, people that understand truly what's happening as we're going through this dynamic paradigm shift that's occurring right now. So please consider jumping over to the gadfly.vhx.tv. We can learn. I truly believe that we have the best contributors that are providing great analysis of economics, geopolitics with Jim Willey, London Paul, Ken Shortgun Jr., who's joining me today. And don't forget to go check out Ken's work over at thedailyeconomist.com.
Actually, Shotgun Economics. I no longer have the Rothschild.
Oh, I'm sorry. The link came up. Yes.
Forced it away from me.
Yeah, Shotgun Economics. Yeah, I don't want to get you back in trouble again, Ken. And then for our Gadfly subscribers, thank you for subscribing and supporting our work that we do here on the Gadfly. Please comment directly on the video or jump over to the forums as well. Ken, thank you for a great discussion today. And needless to say, I'll be staying awake considerably tonight watching things unfold.
Yeah, let's see if we get Paul on or Jim on tomorrow, and I'll be first thing in the morning.
All right. Thank you, Ken. I appreciate your time.
Okay, see you,
Take
CJ.
care. Bye-bye.